Thursday, August 24th, market analysis, Stan Ehrlich. Today is a very profound day for the stock market indexes. I am about to tell you that there is a head and shoulder top that is building its potential last shoulder high today, but there's a little twist to this. And if I'm right, we're going to have a very big downside correction during October. Probably. No guarantees, obviously, but here we go. I always start out with the stock market index. This is the S&P 500 spider. We have a rally high that occurred on June 15th. Remember that date. Basically, it's the same for all the indexes. And a 1 week decline or so. Now, the rally that occurred ended up producing some very significant reversals on the high and the spider. We sold the high day. Our ER3 got short. Everything has dropped down until a few days ago. All right, let me put this line back into place. And then we got oversold and bounced off a little bit of support, previous lows back on June 26th, slightly higher, but we bounced for 3 or 4 days now. Today we opened a new high ground, but here comes the parallels you want to look for with head and shoulder patterns. And it could just top or bottom. First of all, how much time passed from the first shoulder to the head? This blue line right here shows you the amount of time, and this blue line down here shows you the same amount of time to the far right, except I can't push it off the right of the screen. It lands on approximately September 14th or something. So we've got 2 or 3 weeks until theoretically you're supposed to have the last shoulder high, which is today looking a lot like a shoulder high early. One catch, the low today so far is 1 tick above yesterday's low, and therefore not an outside down day or engulfing or bearish engulfing day, but certainly a big failure to hold the rally early and at the right prices, because the first shoulder way over here was approximately the same price levels, and shoulders are relatively level oftentimes, not always. And you've got a slightly upward slanted neckline, the big fat red dashed line from June 26th until a week or so ago, August 18th. Now, if I'm right, and this is the last shoulder high today, done, gone, we're supposed to go sideways no significant amount of time. We're supposed to not go usually not above today's high. It might a little bit because the timing is a little too soon. But I said what I said, or it's just going to go straight down. And that's what happens often. In the next 2 or 3 or 4 days, we could be breaking below real soon the neckline. And if you do that on a closing basis, especially on a Friday, the end of the week, that would be a classic bearish breakout. Then what? Well, this line here, this one I just moved a few minutes ago, represents the depth of the formation from the highest high down to where the neckline crosses that vertical line. I have duplicated it over here, so now we're starting at the neckline hypothetical crossing day, which I added a couple of more days, and we get a downside objective that is, pretty much 407. Well, what does that do? Let's look at the bigger picture. How about this? Catch this. I got to rescale 1 moment. If you take the top of the market we have just had in a resistance area, historical resistance area, with a bearish ER sell signal, which is the exact opposite so far of October 13th of last year, the potential head of a head and shoulder pattern. October 13th last year was the bottom of that head and shoulder, head, shoulder, neckline, breakouts, minimum upside objectives, ba-boom. So why can't this be a smaller version of the same thing, but a top coming into October? I think it might develop into that. I got to be careful. We got to watch for things that don't go right and then kind of abandon the story completely. If you choose to go short in this neighborhood, time wise and price wise, your stop should be something a little bit above today's high, in my opinion. So the downside objective would be close to a Fibonacci 50% retracement. It's almost the same price for the downside objective, plus the fact that we will be digging into a very large area of support. The blue zone starts the large area, I think is the best part of it, but it certainly does extend further on down at certain levels like that one. So I may even put a line back in there. I probably had it there and erased it a few months ago, again, because it could become relevant. Hey, DIA. So we have the same story. Timing is a little different. Prices patterns a little different. The head of the formation contains two bearish engulfing ER sell signals. Neither one of them work particularly well or at all, but they do happen during top and bottom formations. I've said that almost every day. Too bad we didn't get the highest high. We have an outside down day today, a bearish engulfing. I put little red dots on today's vertical bar because it is a bearish engulfing, although it's not an ER official sell signal like that one was and that one was. I think we got the top of the market here before. Yeah, that one was, and that was January 5th, 22, the top of the market. End of story. So it's becoming very bearish very quickly, and that's typical of breakout situations. All of a sudden, something bullish that looked like it was supposed to be working fails miserably, and boom, you just have a total reversal of situations. So obviously, if we break below the lows of the last couple of days and stay there, and that could be in the next 2 hours and a half or whatever, we are going to have a bearish breakout, and it could be very bearish. This pattern I did not draw on the downside objective, but I can eyeball it real quickly, and it's going to be down to something around here, which again is very major historical support. I don't think it's a fib number, maybe 382, but not 50. So that's interesting. But none of this changes the situation about the October lows. That is just shaping up to be more profound than I originally thought until now, today, that is. Let's go to this at the Qs, because it has a bearish engulfing also today. You realize the S&P is only missing 2 ticks. If we make new lows for the day by 2 ticks before the close, it will have a bearish engulfing also, all 3 of them. But it came so close. Back to the Qs. This is the pattern. A little bit too far out for the shoulder timing-wise, but you might also consider taking the middle between the 2 highs as your timing point, which would extend by apparently 4 days, by 8 days total, the time frame for when you find the last shoulder, which looks pretty damn good at the moment. So right in this range is very averaging timely. I have no problem with it being here, and of course no problem with price it's at. It's almost dead perfect. The high today is almost perfectly the same high of the high that we had on June 16. The neckline is slightly downward slanted, and we're going to go down to approximately 322 if this works. That is a big move. So is it going to happen or not? I can't help but say what I have to say here because I see it starting. You know what to do. If you're long, raise your stops a lot real quick. And if you're not short, consider how to get short. We need, again, not to go up any significant amount more or for any number of significant days. A few days slightly higher would be acceptable, but damn, it's good, very good looking right now. Okay, strap yourself in. We might be in for a ride here on the downside into October. Again, I'm very surprised that I'm finding evidence that that could very well be starting in particular today, let alone the fact that we got sell signals on the top of the damn market. Also, I'm going to skip the 2000 today because I spent so much time on the indexes, but I hopefully, rightfully so. bonds. Today or the last couple of days was hopefully going to be exhibiting some sort of cycle high, not where you would want it. That's where you normally want them. That's where you normally want them. That's exactly with a bearish engulfing sell signal where you naturally want them, but they don't always happen that way. They happen sometimes in a little rally in a downtrend like in here. Now, if that's the case, and this is all we're going to get, because today we got stronger than yesterday's big up day, but we're flip-flopping a little bit. That is a very minor, really not very reliable a reversal of sorts. I don't like them, but they can, be the turn. They're just not very reliable. So if this is going to go down and make new lows, and I don't see it stopping yet, we didn't get up into the resistance levels so far. We do have the possible double bottom, yeah, but what happens if it starts to make new lows again? Ouch. That's pretty much convincing a lot of intermediate to longer term traders the trend is down. Downside breakout, rally into a little bit of resistance, and the new lows after that is not particularly a bullish story. If that happens, the overall stock market's not going to like the expectation of higher interest rates. I don't think. So they corroborate a little if the bonds don't go up. Kind of a hinging piece of information, to say the least. Okay, other futures markets, almost an outside down day, not quite on the E-mini, but we don't have it. I believe we do have an outside down day on the NASDAQ. Bearish engulfing, making sure of that. Today's low is 43.50, and yesterday's low is 14,957.25. So 43 is below 57 last I heard. Bearish engulfing. That's not particularly good. And I didn't mark in the shoulders and all that stuff, but there's the pattern with a slightly downward slanted neckline, and you're going to be going down to, oh, interesting, about 13,200. Next, oversold condition caused a rally, and this is the bond market. We've gone over this one, and 10-year notes are the same as bonds, period. And I'm going to go a little faster here. Sell signal on the top of the crude oil market. We got short at the high day, ER1. We got short the next day at almost the high of the high the next day, whatever, said that wrong, and haven't had losing moments since. Looks like we tested yesterday's new low for the move down, and a little bit of a bounce here. I don't think that means too much, so I'm expecting lower levels, and frankly, down into this red zone. Next, heating oil. Head and shoulder top is still a possibility. We got a little bit of a sideways day today. We got to start going down soon. You can't build a big fat shoulder over here without something big and fat. Well, it kind of is, isn't it? 4 or 5 days. Well, all right, so it's okay still, as long as it doesn't get above 3.178 and close up there. That would be too much width, too much rally, and it would be the second rally. Don't need that. So it's pretty much sideways to down, and it has to be in the next couple of days. Next, natural gas. Almost a bullish engulfing, but it's not quite there. We did get a sell signal that worked really well. We did test support area. I should probably have colored that in, but you can see the horizontal cursor is right clipping off a bunch of highs and lows, mostly a bunch of lows, or very close to. So we're probably going to bounce here and maybe back up to where the bearish engulfing was. Next, got the bottom of the market in gold and in silver and in platinum, all at the same time, along with copper, all 4 metals. You'll see here. Bullish engulfing green ER buy signal happened on the low day. That was Monday of this week. And we have a new high since then, with a little bit of a dip, but we're staying above a little resistance zone, and that's good if we can close here. I'd like to see a new high close, but, I got to expect a little bit of a dip. After all, yesterday was a whopper of a rally, and we were very, very happy. Next chart, the ER3 automated trading system is being applied to this chart at the moment, live. It shows you we had a bearish trade back here, and we got out here. On the same day, we caught the bottom, almost the lowest low, of the silver market. last week. I think it was Thursday last week. Yeah, look, right. And we got an ER3 fill right there. And it was closing at about the same price we bought it at, probably a scratch trade, no profit, no loss. And then it made money and more and more. And today's the first day, a little bit of a dip. No big deal. We're overbought. Should expect that. A little bit of a dip. Man, not too much more. Let's see what it looks like in the bigger picture here. Very good support, held the market at a bullish engulfing. And I'm looking for a rally probably up toward 25, a little bit more, which could still happen in the next couple of days. But if I'm still able to hang on to this trade and it closes above 25.6, that could turn out to be super, super bullish. 1 second here. Yeah, I see it, but I don't like it because of this bump right here. Some people might say that's a large shoulder, and this is a double top, which is the head of the head and shoulder, and the last shoulder was a double top also, which, by the way, we had bearish engulfing. It's double in both top situations. Oh, my God. The silver has been just great to us this year. All right, so still long. Stop is below the market. And looking for higher levels. But again, a little concerned we're going to get out with a nice profit. Next chart. Platinum got almost the lowest low for the move. Bought on that day. Profit on the close. Almost bought the low the next day. Profit, good one on the first day. Tiny bit less on the next. More money, more money, more money today again. And a new high for the move up since the buy signal. What can I say? I can say I think we're going to reach maybe 1,000. We're not overbought yet, but look, we're not getting very far away from it. And remember, I don't use 70 like Wells Wilder used. I use 75. And it basically is an educated guesstimate that's a little bit more stringent than 70. It works for me. Next is we bought the bottom, the low day in copper, all four metals. Today is a little bit of a dip. We got long, a little bit below the middle of the range of the day after the signal for ER3. Closed with a profit. We just didn't buy it real close to the low. That's too bad. But more profit, more profit, more profit. And today's the first day we have a bit of a dip. Not too worried about this so far. Looking good. Next. We sold almost the top of the move in soybeans. Now, this is an ongoing saga of sorts, a little bit of a major story going on. If you like the bullish part of it, you can talk about a long-term major upside breakout, and it did last for a couple of weeks, and it did go a significant distance. When you had the typical downside correction, we got a bearish sell signal, which is great, almost at the top, and it came back to support, which I talked about before it came back down to it. Getting oversold, hey, there's our rally out of it. Here we are. Now what? Well, if it keeps on climbing a little bit more and eventually get above 1439, call it 1440 on a closing basis, we could have a super bullish long-term perpetuation formation. But we're kind of between a rock and a hard spot. And if it does not, right here at an old high, continue to rally, then it's going to start to drop off on the downside. And if we get below the blue zone at 1277, let's call it, and stay there, we have a major downside breakout, and we could drop easily all the way down to 1070. So again, I'm waiting for something definitive to say, because I got to keep my mouth shut when I don't have a really great idea. Next chart. Bearish engulfing on the high day of a double top formation. A lot of these lately. That's been really great. Almost a new low close, not quite. Inside trading range day, nothing particularly profound about the doji. So, like what I see, I'm looking for a test of 57.80-ish. And some people might try to call this a shoulder, and that being the head is the highest high. That's true. and the time frame is close to being about the same from the head to each shoulder, but this is a little bit further out than normal. But it's so close to the previous high, the head, it's not really a shoulder, it's a double top. Come on. And you know something? The downside objective on either one of these patterns, if they work, is going to be almost the exact same number. So who cares? I'm looking for a breakout to the downside below 57.70, and the downside objective, I haven't measured it exactly at the moment, should be around 51, below 52. Next chart is meal. Yeah, I got stronger than God. Okay, so significant resistance overhead, almost overbought 73.19 at the high of the day. So it looks like it's probably going to make new highs into an overbought situation and into resistance. It's going to top out again around 420 in the next day or two. I don't know if it's going to get there today. That doesn't look necessarily impossible. Okay. Be prepared to go short on soybean meal. Next chart. Corn, new lows, stayed there, bounced, came down, challenged, bounced feebly, nothing. It's going to make new lows real soon, next week, maybe tomorrow. And that'll be below 460. And that is challenging in a very important previous low way back on July 22 of 22. So if that's broken, which it looks like it's going to be, you probably could drop off a sizable chunk more. Yep, I would say at least down to 380, low 380s, and maybe even much more than that. This could be building a very, very big long-term top on corn. Next chart. Wheat, well, we already saw that because of the artificial war, and we got short on the high day, by the way, March 8th. An incredible bearish engulfing double limit move after going up the limit and locked limit up all day long, sometimes for about 6 days in a row. And then we got a sell signal on top. We just challenged recent lows about 2 months ago, but we were oversold, so we're bouncing a little. It's been about 3-4 days. It hasn't gone up much at all. In fact, the feeble rally that it had for a day and a half just bumped to get a little against a little resistance. So I'm looking for new lows here, and it may be very soon. I don't think that oversold condition is all that big a deal. But, new highs for 3 or 4 days, I'll give it a little bit more upward potential. But I don't see it happening. I think it's more likely to make lower lows and drop off a chunk more real quick. Next chart, corn, live cattle, sorry. Possible head and shoulder top. Outlined this several days ago. Rallying back up again toward the neckline. I don't like the second chance of rallying back up, but it doesn't violate any rules for this pattern. I also don't like the fact the neckline is so upward slanting. And yeah, I know if you spread it out, it won't be so upward slanting, but that's silly. Okay. Otherwise, everything looks pretty good. All the body parts are there. We got a bearish engulfing on the first shoulder. Too bad this wasn't overbought because it was a bearish engulfing, but it wasn't quite. Wait. I am lying. Oh, we did get a sell signal. I'm sorry. The blue line was covering it up. Excellent. Perfect, actually. First shoulder high, head of the formation, and oops, that's a bearish engulfing, but it wasn't quite overbought enough. Bummer. I would have had 3 signals on the 3 parts of the formation. Damn. All right. So, so far so good. I do like what I just said about the formation, but I'd wish it would go down real quick, real soon, so I don't have to talk about being wrong about the pattern working correctly. My minimum downside objective would be 171, but that's a minimum. It also happens to be testing a previous low of importance. Interesting. Next chart. Hogs. Coming down. Probably test 75.8 soon. Then probably going to drop off to 70.80. Next, looking bearish, can't help it, coming down relatively slowly low. Next, OJ, overbought like crazy again, divergence on a significant time frame as well, bearish engulfing on the first of the 2 highs. Too bad we didn't have one on the highest day. We almost did, but not quite. Upside exhaustion gap right there. So this is now looking a lot toppier. We tried to come up twice, no higher highs, couldn't hold very well. And this looks like it's about to have the lowest closing price since the high day. And maybe sell off even more before the close. Yeah, that's looking more bearish. So the next move down is to 297-ish. And then we're going to be challenging 290 and again 280.78. Next chart. Huh, we got the top in cocoa, the high day. A premature sell signal didn't work. The one on top sure as heck did. Fantastically. The next huge down day. Since then, it's rallied back up, adequate amount, failed, and starting to make lower lows, including today with a momentary slightly higher quote than yesterday. It is an outside up day at the moment. I don't think that's going to amount to much. Next chart. We've got coffee. Bottom of a support area. Bullish engulfing. Come on. We bought almost the exact low of the day at close to 149.44 2 days ago. Up it goes. New high. If you're long for the R3, and I think actually we missed by 2 ticks, the low that day was 149.55 and our bid was 149.52 300ths. Oops, what a shame. And that happens, yeah, that happens with automated trading system. But guess what? We're still long from ER1 with a green bar on August 18th. That hasn't changed. So looking good. Next chart. Sugar. Double or triple top, depending on your flavor. Downside objective had been fulfilled already. Rally back into major resistance a few weeks ago, starting to make lower lows since then. Now, I still have to stick to my commentary for the last several weeks. I think we're going to go down to 20. This little rally should fail and start to turn down real soon, or I'm going to have to change my story. Next, cotton. 2 spikes into resistance. The first one, we got a bearish engulfing ER sell signal that worked a little bit, not great. We're now rallying back up again, not overbought, so we're not close to a turning point yet. I think it still could do it a third time, but it's looking a little bit more bullish longer term. Why? Well, way back here in October of last year, you've got your lowest low. Then you've got a low that's higher months later. And again, since then, which is March, you've got higher lows, and so far, higher lows. And it's getting squeezed like an upward slanting flat top right triangle, which you could have drawn the lines, which breaks out typically in the flat side. So watch for an upside breakout on this. I would go long if we had an upside breakout. I would consider it anyway. And we'll see what happens. We're back to the E-mini. You guys have a great day. Sorry, it's been 29 minutes. Talk to you tomorrow, Friday, end of week.